According to the Canola Council of Canada, Canada exports over 95% of its total canola oil to the United States, contributing billions of dollars in economic activity to that country. However, President-elect Donald Trump's tariffs could upend that. To discuss this further, we have in the studio Moritz Steinbauer, Senior Vice President of Diversified Industries at Morningstar. Nice to see you, Moritz.
Thanks so much for having me on.
So I was surprised with some of these numbers here. You say that the U.S. and China highly reliant on our canola oil, our canola seed. So what are the numbers, just as a starter here?
Sure. So in terms of canola seed, we actually don't export too much to the U.S. Just about 5% of our canola seed goes to the U.S. But when we talk canola oil, that's 95% plus going to the U.S. And canola meal is more than half of our export going to the U.S. In terms of total economic value, that's sort of $8 billion plus. And then as it relates to canola seed, about 70% of our canola seed is going to China. So that's $4 billion plus.
I'm just curious, just for my own edification, so 95% pretty well of our canola oil goes to the U.S., but only 5% of the seed. Why is that? Is that because they have a whole bunch of it, or what?
Well, I think it's just like sort of the trade flows and the needs. I think one of the reasons going into the U.S. so much in terms of oil is the biofuels market that has really grown in the last number of years. So most of our canola oil goes either into the food supply chain into the U.S. or into biofuels.
Okay, so the U.S. is threatening tariffs. We know that. There's a probe by China right now in response to tariffs on EVs. So overall, if this probe continues, maybe China retaliates somehow, the tariffs come on, what could the ultimate impact be in the canola sector?
Sure. So there's a lot of moving parts. So maybe first the Chinese tariffs that are looming that were put on in response to the Canadian EV tariffs. So we don't know exactly when those are going to come on, how meaningful they're going to be, or for how long they're going to stay in place. But looking maybe at a case study would be Australian barley. So 2020, if you remember, that was also a geopolitically difficult time. China put an 80% tariff onto Australian barley, and an 80% tariff essentially, killed barley exports from Australia into China. So if something similar were to happen to us with canola, it could potentially, essentially halt any canola seed exports from Canada into China. Now, it would probably mean some sort of rebalancing of global trade flows, and ultimately Canadian canola would, find a home. But it would certainly, in the near term, be, very volatile in terms of markets and quite costly for the Canadian supply chain. And one of the interesting aspects around all this is that, like we just talked about, canola seed primarily going to China. One of the nice offsets to that is that we could just crush more here if a ban or a tariff to China come into place, and then move canola oil into the U.S. But now, if we're looking at a tariff on canola oil into the U.S., that would add further difficulty. So we're in this uncertain environment where both our largest off-taker of canola seed, canola oil, and canola meal are possibly trading actions against the Canadian supply chain. Right in the
line of fire. Yeah. So if these tariffs come in from the U.S., what could that do to the canola oil sector?
Yeah, so I think it's not as extreme as on, the possible Chinese tariffs, right? If the Chinese tariffs are so meaningful that it's a full-on export, stop, essentially. 25% tariff from the U.S., wouldn't, do that. And we also have to keep in mind that with a lot of these agricultural commodities, we're such a large grain exporting nation, it would be difficult for the U.S. to potentially find other markets to source things from. A good example would be oats. So we export about 80% of our oats to the U.S., but we make up about 90% of U.S. oat imports. And we're the largest exporter. The next two countries, Finland and Sweden, significantly smaller exports. So the U.S. would probably have to swallow a lot of the cost on the tariffs, like the customers and the ultimate end consumer. But I think some of those costs ultimately are also going to be borne by the Canadian supply chain, for example, due to canola trading at a discount.
But so with the U.S., could they be bluffing? Because, as you said, it's just going to raise their prices.
Yeah, and you bring up an interesting point, actually, because like we talked about, a lot of the canola oil from Canada is going into the U.S. biofuels market. Now, another input into the biofuels market is used cooking oil. A lot of that is coming from China. So, depending on what happens between the US and China in terms of their trade relations and possible tariffs, it would actually possibly drive demand for Canadian canola oil. So putting a tariff on Canadian canola oil almost seems counterintuitive because it would be the natural offset to maybe use cooking oils coming out of China.
So let's assume we get tariffs out of the U.S. on canola oil. We get the tariffs from China on seed. You say that the global trade flows would rebalance to other geographies. How would that work? Yeah,
so for example, back to sort of the Chinese example on the ban on or possible really high tariff on canola seed, China ultimately will have to get seed from elsewhere. Really, the other two grain-producing nations would be Australia or Ukraine as it relates to canola seed. Now, Ukraine is a lot closer to Europe. Makes a lot more sense for them to ship there. And of course, there's uncertainties with the war going on there. And China could get it from Australia, but they actually currently have a zero-tolerance policy around importing Australian canola due to blackleg disease. So really what China might have to do if they decide to go ahead is lift maybe their ban on Australian canola so they could take Australian canola, and that would then free up other markets for us, for example, Japan, Mexico, or Europe. And very similar to, on the U.S. tariff side, while, any U.S. tariff wouldn't, certainly stop our flow of trade, we would, still be trading with the U.S. at a 25% tariff. There would just be some costs involved. But still, global trade flows, we might be looking at that it's cheaper for us or cheaper for importers to ship to Europe, and then the U.S. might source certain commodities from Europe to kind of fill that void.
Just lastly here, Moritz, as we wrap it up, I understand that grain handlers are much better prepared this time around than they were in, say, 2018-19. How so?
Yeah, certainly. So in 2019, when we were, when there was a ban against two Canadian exporters, that was a pretty meaningful hit to the supply chain. So the Canola Council of Canada estimates it was sort of up to a $2.5 billion hit, and that was just two exporters. But since then, all the grain exporters and the supply chain as a whole, they have, really diversified their customer base more globally, and our domestic crushing capacities have greatly increased. So just this last crop year, we crushed 11 million tons. And so now we have the ability, not just reliant on only the canola seed, but also canola oil, and it just opens up a lot more markets to exactly, work toward that rebalancing of trade flows if we are hit with tariffs.
Well, thank you.